It's no secret that inflationary times may be some of the best times to actually take a price hike. Sales reps finally have a reason when customers say, why are you doing this? Why are you raising rates? So worldwide, companies are rushing out to their customers to take price hikes, citing increased supply costs, increased labor costs. And let's face it, history shows that some of them are getting a little extra kicker to boost profits. That's why it's so curious and quirky to see what happened to Netflix when they took their recent price increase. In case you haven't heard, Netflix raised their rates 10% in January and almost immediately lost 200 subscribers. Many shareholders panicked and dumped their shares. Netflix lost $54 billion in market cap in one day. What happened and what lessons can be learned from this? Well, the first lesson is when you're deciding if and when you're going to take a price hike and how much, you have to have a clear-eyed view of what stage of your product or service life cycle that you are in. If you're in an early growth, hot stage, customers are less price sensitive and more willing to pay more. The opposite is true if you're in a mature life cycle stage. More price sensitivity is there. We think that Netflix may have been fooled by the pandemic as to what stage they were actually in. During the pandemic and lockdown, people were taking the entertainment dollars that they typically spent outside the home and spreading it across a number of different streaming services. So Netflix saw subscriber growth, increased usage rates, probably thought, hey, we're still in a hot growth phase. But when restrictions were lifted and people kind of went back to their old patterns, it revealed a streaming industry that is probably much more mature than Netflix thought. It has some of the hallmarks that Mary and I teach in our Caltech pricing course that are the signs, the warning signs of high price sensitivity. It's market fragmentation with many different and new suppliers. You've got Hulu and YouTube and Amazon, Apple TV, and many, many more. There's also another hallmark of high price sensitivity here besides market fragmentation. There's low perceived differentiation between the providers. And there is also just a low perceived risk of switching from one supplier to the other. We think that many of the Netflix defectors probably said to themselves, I've got plenty of shows queued up on Apple TV. I can let this Netflix subscription go. So you've got to know before you take that price hike, where are you at in your product or service lifecycle? The second thing that the second lesson here is you need to have a clear communication strategy and message that explains to customers why you're taking the price hike, especially if you're in that mature price sensitive phase. Now, Mary talked a couple of months ago about the beautiful job that Amazon Prime did and communicated a similar level price hike. Amazon talked about many customer appreciated features of their offer, not the least of which was that they were rolling out same-day delivery in more geographies. Now, I don't know about you, but I didn't hear one person complain about Amazon Prime's price hike. Netflix's around their price hike was much more generic, less exciting, less differentiating. They simply cited higher costs to develop content and costs to develop video games. Okay, this was not enough for the 200,000 subscribers to say they were willing to pay a couple of extra bucks a month. So there you have it, the two lessons. Know what stage of the life cycle that you're really in before you decide if and how much of a price hike to take. And clearly communicate your differentiating value when you take that price hike. That's what companies are doing that are successfully taking their price hike. And they're also getting that little extra kicker that I talked about for their value